Hello and welcome. This is all you need to know. I am Agam Vakil. Let's start off by taking a look at the global markets. At this point in time, mixed cues coming through. When it comes to the American markets, we did see gains in the Nasdaq, specifically on the back of Apple moving ahead, and as a matter of fact, moving well above the mark of $1 trillion in terms of market capitalization. But we also have weakness in the European indices. As you can see here, all the important European indices actually closed in the red. Mixed cues coming in as far as the Asian markets go. Subdued cues, quiet cues coming in from the Asian markets. The Nikkei flattish, and the Hang Seng, along with the other Asian indices, were marginally in the green, in the red. But let's take a look at the SGX Nifty, and that's indicating an up move around 0.4%. Our own markets did not do very well yesterday, considering we saw hit a cut of around 101 points on the Nifty 50. The mid cap and the small cap indices doing marginally better than the major indices, and the Nifty banking and the PSU indices also declining in trade. Two indices which stood out yesterday in terms of sectors: the Nifty Pharma advancing on the back of Lupin and Dr. Reddy's, and we've had some losses in the auto sector following disappointing volumes coming in from the auto sector, and otherwise perhaps profit taking too. That's the reason why we saw a 1.4% decline in ADRs. It's the American Depository Receipts. Dr. Reddy's, HDFC Bank and Wipro will advance. Dr. Reddy's stood out here, up as much as 2.6%, and Vedanta was the other one which declined by around 2%. Subdued cues, otherwise very quiet cues for Infosys and Tata Motors. FIIs sold 640 crores worth of equity on a net basis, and DIIs also sold 340 crores worth of equity on a net basis. But when it comes to contributors, the main reason behind the big fall on the Nifty yesterday was Reliance Industries, HDFC Twins and Kotak Mahindra Bank providing the bulk of the declines that we saw in the Nifty 50 yesterday. But in terms of the futures and options space, we are looking at unwinding in the futures, and it's the same for the Nifty banking futures. In fact, for the third straight day, the unwinding coming through there. Moving on, we are also taking a look at the way we see your open interest pan out in terms of maximum open interest, which gives you a rough range within which you can expect the Nifty to move within in the near term. 11,000 put has the max OI and 11,500 call on the upper side. But when it comes to changes in open interest, well, it was mostly 11,500 call which stood out, which saw writing, and the 11,000 put which saw unwinding in yesterday's day of trade. Nifty put call ratio came off a little at around 1.64, and was the same for the Nifty banking index too, at around 0.89. In terms of stocks, I'm watching out for Adani Power, which moved into the FNO band very early into the series, and we're watching out for Devi's Labs, which advanced, saw fresh longs. We also saw fresh longs in other counters such as Jet Airways, and on the losing end, weakness coming in. And with for Marico, after it announced its earnings, we will be speaking with the management today. We saw about 14% increase in open interest. So this is as far as the stocks are concerned in our markets. But now let's go across to Paul Allen of Bloomberg for the top international headlines.
Apple's rise over the past decade has seen it pass a unique milestone. An almost 3% gain on Thursday made it the first American company to be worth $1 trillion. 4 decades after Steve Jobs and Steve Wozniak founded the company, Apple beat Amazon and Google to the landmark. PetroChina briefly hit $1 trillion in late 2007, but fell rapidly in the financial crisis. Heineken and China Resources have confirmed speculation about a tie-up, with the Dutch brewer becoming a 40% partner in a deal worth just over $3 billion. China Resources makes the world's biggest selling beer, and shares leapt to their highest ever when reports of the deal surfaced back in March. At the time, Bank of America Merrill Lynch said it could be a game changer for the brewing industry. Saudi Arabia has cut September pricing of all oil grades to Asia, Northwest Europe and the Mediterranean as it boosts supply to meet demand. Aramco lowered the premium for Arab Light to Asia by 70 cents, bringing it to $120 a barrel above the Middle East benchmark. US crude futures bounced from a one-month low as a report was said to show continuing supply drain from the main hub at Cushing, Oklahoma. A bipartisan group of senators has introduced legislation to impose new sanctions on Russia for allegedly interfering in US elections. The bill includes penalties affecting Russian sovereign debt and energy projects. It also requires a report on President Putin's assets and net worth. Meanwhile, the FBI director says he's closely watching Russian attempts to meddle in this year's midterms.
Even as we speak, we've got open investigations with a foreign influence nexus spanning field offices, FBI field offices across the country. So make no mistake, the scope of this foreign influence threat is both broad and deep.
Global news 24 hours a day on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Paul Allen. This is Bloomberg.
After months of waiting, it finally happened. Apple has become the first U.S. publicly traded company to hit a $1 trillion valuation, leaving the likes of Amazon, Alphabet, and Microsoft in its wake, but not far behind. Apple's milestone is significant and a testament to the rapid growth spurred by the success of products like the iPhone and iPad, as well as CEO Tim Cook's leadership after taking over for visionary co-founder Steve Jobs in 2011.
And we are calling it iPhone.
But let's not forget that what's now the world's most valuable company was on the brink of bankruptcy as recently as the late 1990s. That was until co-founder Steve Jobs returned to the fold. Since then, it was one success after another. And in the 7 years since Jobs' death, Cook has steered Apple to new heights by launching key new devices like the Apple Watch, iPhone X, and the AirPods. He's also pushed the company deeper into new services like Apple Music, which is now a key revenue driver. And Cook and his team aren't stopping there. They're keeping Apple on the technological edge, delving into self-driving cars, augmented reality, and healthcare. What does he think of Apple's latest milestone? Cook told Bloomberg in an interview, quote, "I don't really think about it. That's the truth. I still view Apple as a pretty small company, the way that we operate. I know it's not numerically, but the way we function is very much like that, to be honest." And to grow beyond $1 trillion, Apple has to keep churning out cutting-edge smartphones while still finding its next big hit and growing the digital services business. A larger version of the iPhone X and a cheaper model with many of the X's features are on the way. Beyond that, AR could revolutionize personal computing once again, while a big online video push is coming soon to an Apple screen near you. Mark Gurman, Bloomberg News in San Francisco.
Morning on to stock of the day, which is Torrent Pharmaceuticals on back of good set of numbers. Let's look at the top line growth route. We're looking at a 37% uptick there to a number of 1,872 crore as compared to nearly 1,300 crore that we've seen in the corresponding quarter. Also, EBITDA performance of this company has been decent. We're seeing a 65% uptick at a number of 477 crore as compared to nearly 300 crore that we've seen in the corresponding quarter. Margins too have shot up for the company at 26% as compared to 22%, and profitability, however, for the company has declined by 13% at a number of 163 crore as compared to nearly 188 crore that we saw in the June quarter of the previous year. What goes behind the making of the numbers? Higher revenue and cost saving measures have led to operational good performance of the company, where it's more than 12% higher than the consensus estimates. Raw material cost as a percent to your net sales has come down to 32% from 32%, and other expenses as a percent too has slid as a percent to your net sales to 26% as compared to 29%. Also, let's look at what actually led to a decline on the bottom line, which still ahead was of the Bloomberg consensus. It was a lower other income and a higher finance cost, along with the depreciation, which is weighed on the bottom line performance of the company. Other income fell almost 74% for this company YOY basis. Finance costs shot up to 122 72 crore as compared to 56 crore that we saw in the corresponding quarter. However, the Unicam acquisition actually has led to a higher finance as well as depreciation cost, which also rose as much as 88%. However, the Indian business, which performed well on account of organic growth and acquisition of Unicam, which has started doing well, has led to a good set of numbers on the top line front. Having spoken about the top line, let's look at the segmental breakup there. Indian business, which forms the bulk there, it's almost a 79% uptick. US business, there's a 23% uptick there year-on-year basis. And Brazil business, however, has seen to an extent a decline of 7%. Germany business too has seen a 32% sharp uptick. If you look at the management commentary, that's where the strength actually lies for this counter. They've spoken about the worst in terms of the pricing being over, and they're looking at a better US performance coming in on sequential basis for the counter. CLSA, however, has retained the buy rating and, however, has increased the target price of this counter on back of the stronger outlook on its Indian business.
Let's shift focus to currency and commodity space. Talking about Indian rupee first, it was quite a volatile session for the rupee yesterday as it touched a 6-week high in the early hours of the trade and later dropped 27 paise to end at a fresh 1-week low of 68.70 levels against the dollar. Now, in fact, if you see, the home unit has actually snapped its 2-day winning streak and dropped nearly 0.4% versus the greenback yesterday. It's most in nearly 2 weeks. Traders believe that slide in local equity market along with some weakness in Chinese yuan largely weighed on the rupee yesterday. Well, speaking of the bond market, sovereign bonds dropped yesterday as we have seen the 10-year benchmark yield gaining nearly 2 basis points to end at 7.72%. On the global front, dollar index now trades higher for the 4th consecutive session near its 2-week high of 95.10 levels. Now, the dollar's up move was largely supported by a drop in pound even after Bank of England raised rates by 25 basis points, but they signaled that they were in no hurry to raise interest rates gradually due to Brexit uncertainties. That apart, Chinese yuan slipped to its fresh 14-month low versus the dollar on the back of US-China trade war fears. And lastly, speaking of dollar rupee, now it is trading at 68.60 levels against the dollar in the non-deliverable forward markets, which indicates a positive opening for Indian rupee in today's trade. Having said that, let's shift focus to commodity space. Good morning, Jayesh. What cues are you picking up?
Morning, Saloni. Let me start off with oil prices, which have been quite volatile this week, down one day and up the other day. In fact, yesterday we saw a 1.9% surge in the oil prices. However, if you look at the current screen, both WTI and Brent are trading with a mild bit of red tick come about. Now, yesterday's up move was largely on account of the US supply, which has been seeing some bit of draining. In fact, Genscape has come out with a report and is set to show a draw of nearly 1.1 million barrels from the Cushing stocks. We also understand that Iran has now planned a military exercise in the Strait of Hormuz, so that will be important to watch out for and the outcome of that. But shifting focus to the base metal space, the index itself continued its downward decline for the 2nd straight day. All major base metals except for zinc, in fact, closed lower. Now, zinc was higher on account of an extreme short squeeze that the market is witnessing on account of the spread, which has now hit a 9-month high. As far as individual base metals are concerned, we had tin and nickel, which declined more than 1% each, and the likes of aluminium, copper and lead closed more than 0.5% lower. Now, if you look at the precious metal space, gold continues to be under pressure and has hit a fresh 52-week low on the back of some strength that we have seen in the dollar index.
Amongst the stocks that we are tracking in trade today includes Capital First, which reported a strong set of numbers for the June-ended quarter, with the net interest income growing by 51% and net profit by a sharp 55%. Even if you look at the asset quality performance, we did see some improvement on a year-on-year basis where the gross NPA number came down to 1.57%. That apart, we're also watching out for Kotak Mahindra Bank, which has completed the issue of non-convertible preference shares, via which it has raised 500 crores, and that has led to increase in the paid-up capital. Now, with this, the share of the promoter has come down to 19.7%. So with this preferential issue, the promoter stake has been bought to sub 20%. 10% as was required by RBI directions by December 2018. So this this norm has been met now for this one. You also have PVR. Good news coming in for this company. They've renewed non-exclusive agreements with Paytm and Book My Show. In fact, this is for a term of 3 years, and for this, PVR will receive 410 crores as minimum guarantee and refundable deposit. You could see some positive reaction on this counter. Emphasis is another one which will consider share buyback on 7th of August, so watch out for this name. Next on the list is VST Tillers. They've reported a muted set of growth for July. When it comes to their total sales, they have grown by 6.4%, even as tractor sales remain just flattish, and about the power tiller sales grew by about 8% or so. You also have Tata Motors, where it has reported its US JLR sales down about 11%, largely led by a strong 41% dip in the sales numbers for Jaguar. Next on the list, what we're watching out for is Vaibhav Global, and this is on the back of a bulk deal where Malabar India Fund has acquired 0.5% stake in the company. The seller was Rahim Ullah, who sold 0.6% stake, but those are some of the stocks that you need to watch in trade today.
We haven't yet given out the full 2.11, so you know, there's some more money that can be handed out on that original estimate. Remember, meanwhile, that many of these NPAs have already been written down completely and provided for. So now what is happening is that we are beginning to see fairly substantial chunks coming back from the liquidation, sale, etc. of these NPAs. The first 12 cases alone, you've seen several of them getting done, some very chunky ones, and some more chunky ones coming through probably quite soon. In addition to which, you've also seen because of the change in the sort of credit culture, fairly large amounts of money also coming back, with promoters coming back and repaying the banks. I mean, estimates are floating around, but they're in the 80 to 90,000 crore range, where other than these top companies, others have also come back and repaid. So, you know, whether it's the top 12 companies, where I think more than 1 lakh crores of just from these 12 companies are likely to be recovered, maybe somewhere in the 1.2 lakh, 1.3 lakh, somewhere in that range. Plus, already you've got this 80-90 lakhs coming through, somewhere in that range. And then there's a pipeline of other companies. So you're going to get a very substantial amounts of recoveries coming through, which are going to directly go back to the banks. And they have recovered. I mean, they've already provided for it. So, you know, this is pretty good.
Okay, Sanjeev, a slightly different issue is.
But important thing to remember is that we do want the banks to. We also want the banks to grow again. So it's one thing to simply provide regulatory capital to them. Ultimately, because the economy is growing, we just discussed a little earlier about the need for a private investment coming back because output gap, etc., is closing. We do recognize that the industrial sector, particularly MSMEs, need bank capital. So we do need to get these banks up and running and expanding again. So I don't think, so we do recognize that it's not just a matter of providing them with the regulatory capital, they need growth capital as well. So should they need it, provisions and effort will be made to provide it. But right now, I think we are still within that original 2.11 lakh crore space, so we can go further on that. There's money coming back from recovery. So for the time being, we are comfortable with it. But if necessary, we will make other arrangements as well.
India's largest oil producer, ONGC, reported a pretty much inline set of numbers with analyst estimates. Now, the revenue of the company came in at close to 27,200 crore rupees, benefiting from higher crude oil and gas prices, while the net profit stood at close to 6,100 crore rupees. EBITDA rose to around 14,700 crore rupees, while the margins came in at around 54.1%. Now, on the operational side, net realization came in at $74.2 per barrel, the highest net realization reported by the company in at least the last 11 11 years due to higher crude prices. And on the production side, if you see, the crude production remained flat for the company, while the gas production was higher in this quarter compared to the last quarter. And on the sales side, crude sales were down by around 2%, while the gas sales were higher by 2% in this quarter. Now, in this quarter, higher crude, other than the higher crude and gas prices, it was the lower other expenses and write-off that aided the financials, while lower other income, higher foreign exchange losses and higher tax rate impacted the bottom line of the company. Now, other income was lower by around 83% because in the last quarter, the company had received dividend incomes from HPCL and Indian Oil Corporation, while the other expenses were lower by around 16% in this quarter because of lower workover expenses. Exploration cost write-off fell down by around 63%, while the foreign exchange losses increased close to 5 times to 900 crore rupees in this quarter. Now, the tax rate remained high in this quarter at close to 36%, which also weighed on the bottom line of the company in the first quarter of financial year 2019. Lastly, in the conference call, the management addressed some of the key investor concerns on debt and subsidy burden. Now, the management said that the company has been able to bring down its debt to close to 16,670 crore rupees as of August 1st from 25,000 crore earlier, that was around in the fourth quarter of financial year 2018. It also said that there is no pressure on the company when it comes to reducing its debt, and they won't be monetizing any of their stake in investments like Indian Oil Corporation, MRPL and on any other listed companies. And on the subsidy burden, the company said that if crude stays at current level, then they are very sure that there won't be any subsidy burden on ONGC in the financial year 2019. Another nifty company that reported its numbers was Amiable Housing Finance, and we have Shraddha to give us details on that.
Right, thanks, Amit. So, the company reported strong growth across parameters. So, the net interest income grew by 22%, net profit grew by 30% for the quarter and came in at 1,055 crores. The company, in fact, has also said that they are going to retain 1,050 crores as ad hoc provisions, even as they moved from Indian GAAP reporting to Ind AS reporting norms. Even if you look at some of the other parameters, strong disbursement growth of 47% for the quarter. Loan growth came in at 33.4%. So loan growth continues to remain in excess of 30% for multiple quarters now. Even if you look at the asset quality, it has remained steady at 0.78%. Spreads, in fact, on the other hand, have improved on a sequential basis from 3.11% to 3.23% as the company passed on the higher cost of funds to customers. Overall, a strong set of numbers in line with estimates, and we do have some marginal price hikes coming in terms of the target price from Nomura and Credit Suisse post the numbers. But we also have Titan, which is going to be reporting numbers today. Agam, what can we expect?
Well, a subdued quarter, Shraddha, as indicated by the management in the mid-quarter update. We're expecting 7% growth on its top line. Margins could expand to around 10.5% against 10%, and net profits likely to see growth of around 11.6%. Do remember, Titan is working on a very high base. But that said, we also have seen the management suggest that there has been weak jewelry demand. If you leave aside the Akshaya Tritiya sales, they're actually looking at a decline in jewelry sales. Diamond studded jewelry, which comprises of around 25% of the overall jewelry sales, has seen a little bit of pickup, but it's been lackluster otherwise. And we do have a small wedding season around May as well, where Titan has not been able to perform. That's where, when it comes to watches division, that is starting to see some pickups on the back of new products, but and that's where we're expecting about 5 to 6% uptick on a year-on-year basis. But on the whole, we're expecting a very quiet quarter from Titan Company.
Let's also get your check on the top 3 stocks to watch based on the delivery buying and selling as of yesterday. The first stock on the list, that would be Aditya Birla Fashion. Now, that was up about 12.5%. In fact, the stock has been on an upward trajectory. Saw delivery buying of 91 crores. The delivery volume surged more than 1.5 times as compared to its 5-day average, and the total volume surged more than 3 times as compared to its 5-day average. Second stock to watch out for, that would be Aurobindo Pharma. Now, that was up about 2.5% in trade and saw delivery buying of 62 crores. The delivery volume and the total volume, both of them surged about 73% as compared to its 5-day average. Last and final stock, Maruti. Now, that was down about 2.1% in trade and saw delivery selling in excess of 500 crores. The delivery volume surged about 67% as compared to its 5-day average, and the total volume surged just about 35% as compared to its 5-day average. With that, it's a wrap on this edition of All You Need to Know. Stay tuned. Indian Open will take all the market action forward. This is Bloomberg Quaint.